evening, sir. We will be starting with your introduction. So, can you please introduce yourself?
Sure, thank you. Thank you so much for having me on your college project. So, I'm Tushar Kansal from Kansaltancy Ventures. Kansaltancy Ventures was set up 8 years back with a view to provide venture capital and any kind of funding like debt or any kind of strategic action like mergers and acquisitions for startups and growth stage companies. Over the years, we have helped over 5,000 startups, and these include from technology and non-technology sectors. We are also venture advisors with a Canadian venture capital fund called Loyal VC, and we have invested in more than 300 companies across 60 countries. More than 33% of those investments have been in women-led businesses, and we follow a large number of diversity-oriented themes also while investing. We have won 4 awards, including from the hands of Dr. Kiran Bedi as being the best startup supporter in the field of STEM. And I've done more than 300 talks and events, including for CNN News 18, Business and Economy, Business World, Curious, and other corporate and academic platforms. So this is about me. Happy to answer any of your questions.
So, in which areas does the venture capitalist have significant background knowledge and expertise, and how did you gain it?
So, venture capitalist is a person who takes money from an investor and puts it in a company, and then over a period of time that company grows, its size becomes bigger. So he sells off his shareholding in the company, and out of the money which comes in, he gives 80% of the money back to the investor and keeps 20% with him.
Okay.
Of course, there are certain management charges which the venture capitalist deducts, because he has to maintain an office, he has to maintain a team which with analysts and with principal, and so he deducts some charges every year also. So now if you try to imagine which kind of a person can be a successful venture capitalist, then definitely you will agree with me that anybody who has knowledge of a particular sector, how does this sector work? For example, you want to set up a retail company in India. You have to know what are the places in a city in which you should prefer to open your outlet. What is the rental you should pay? What is a maximum rental you can pay, and beyond that you should not pay? And when you take products from suppliers, what is the working capital? In how much duration you have to pay them? If your market is paying them in 3 months or 2 months, and you start paying early, then you should know that if you are paying early, you should get an extra discount.
Yes, sir.
So all these things, if you know, then you are the right person to set up a business. You are the right person to be a founder in that particular sector.
Yeah.
So this kind of a person is fit enough to receive venture capital, because he can create a valid business which can compete and grow big, right? Venture capitalist understands the sector, but more so he also understands the financial aspect of money, like how much money costs. Money has a cost, like time value of money, right?
Yes.
So there is a cost of debt. When you take debt, you have to pay 10 to 12% interest in India. In the US, you have to pay 4 to 5%. In Japan, you have to pay 1 to 2%. So that's the cost of debt. Similarly, there is a cost of equity. When you give shareholding to a person and you take money, equity money, the money has a cost. And how do you measure the cost? You measure it by the returns that money is generating in a particular country in its stock markets. So that average return generated by a country's stock market gives you an idea about what is the cost of equity in that country. So the venture capitalist has to have a sense of what kind of money he has borrowed from the investor. The investor is called LP, limited partner. And the guy who owns the fund, who's the sponsor of the fund, and who's responsible to invest that money, is called the GP, general partner. And then there is a principal who heads the small team. Then there are analysts, there is a CFO, there is a CA, and there's a legal to tie up all your agreements. So the venture capitalist, many cases they come from generally Ivy League colleges, because these Ivy League colleges have a very strong alumni, and because of the alumni they are able to get investors, they are able to get LPs. So naturally a person who has proven himself in life by doing an IIT or an IM, other people feel this guy has proven himself, so we can bet our money on that guy. Now somebody who has not proven, then probably if he has done a job in a company where he has been successful, he has risen quite fast, so he understands the sector, people are fine to bet money there also. For example, there is a company Tadpole which came to me last week. It is incubated in IIT Delhi. Now what they do is they convert any combustion engine car to an electric vehicle.
Okay.
So now you imagine what is the market for this kind of a thing, right? It is endless market.
Yes.
The world is the market.
Yes.
And they have created a kit which they can convert any kind of vehicle. And they are incubated at IIT. IIT has also given them some money. So, I mean, if you want to invest in a company as a venture capitalist, this is the type of company you want to invest in, because the founders, they have done it. They have proven, and they have a product in front of you. The other case is like third wave coffee. Like, you used to go to cafe coffee days. After the death of its founder, his wife has taken over. She's not able to manage the debt, and somehow she has reduced the debt by selling of real estate. So the number of branches of cafe coffee day have reduced from 2800 to 450 now. So there is a lot of blue ocean space which is vacated by cafe coffee day. Now that is being filled by Starbucks. Starbucks has crossed 1,000 crore revenue this year, but by third wave coffee. Third wave coffee was started by the management of cafe coffee day. So these people saw that this chain is going down. The promoter does not have money to grow it, so they left it. They took venture capital, and the venture capital guys were very happy to give money to these guys because they had run cafe coffee day and they knew what are the flaws. So if you go to third wave coffee today and you see you see the experience, you see the product, you see the quality, so you see the location of the outlet.
Yes.
So you are able to understand that why did the venture capitalist bet money on these people.
Yes.
So either you have to be a sector specialist, or you have to have proven yourself in life in some way or the other. Or the third thing is that you would have already been an investor, in like an angel investor, investing small amount of your personal money. So you know what investing is.
Yes, sir.
It is a discipline.
Yes.
You have to set processes and follow them, else you'll make mistakes. So this is what venture capitalist is.
Yes, sir. So as you mentioned that if someone comes from a university or college like IIT or IIMs, they kind of have a preference among venture capitalists. So do you really think that giving them a preference just because they come from a certain type of college or university is fair?
Nobody said that life will be fair. I mean, life is never fair.
Yes.
So end of the day, you have to create your own brand. You have to create your own
Identity.
जो दिखता है वो बिकता है, right?
Yes, sir.
तो IIT दिखता है, right? I mean, there was a founder who came to me who was putting battery rickshaw kits. His startup was in Rohini, and this guy had left IIT in third year. He said, "I am doing a startup. I don't want to do a degree." So he probably followed Mark Zuckerberg, and he said, "मैं IIT छोड़ दूँगा." So when I was trying for his funding, one of the very known investors in the market, Mr. Rajul Garg, who's himself an IITian and who runs Leo Capital, he immediately gave meeting to this guy. Whereas I know it is very difficult to get a meeting with Rajul. So, and Rajul was like, he's from IIT, he's my alumni. Now the thing is, people want to identify themselves with, brands which are successful, and that is why the alumni network is the most important, precious resource which you have as an Ivy college. Rather, not so much the content. Content is available on Google. It is available on edtech websites. The infrastructure and the alumni network. It works, definitely it works, and it's people psychology. If suppose I am an investor, right? I have some students in front of me who are from some college I don't know. Then I'll probably have to test them out. So this is what happened with my friend who was my classmate in textile engineering. He wanted to set up a logistics company. He was chief logistics officer of Myntra. He did engineering with me. Then he was from IIM Lucknow. So still the Snapdeal guys, they did not bet directly on him. He went there for money, that you fund me, and once you fund me, then whatever business of Snapdeal you are giving to outside logistics companies, you can give to my company. So this business is a huge business already. So the company size will increase, so your investment will increase because you have the business in-house already. You just have to transfer it. So they first tested him for 1 year. They first asked him to hold a logistics center. They gave him 1 crore. Then they asked him to open a second center. They gave him 1 crore more. So once he did successfully, then they just opened the floodgates and 100 crore, 50 crore. So this is the way. It's about money, right? And it is not your own money. It is LP's money. If today your fund doesn't make a return, in future you will not be able to get money for your second fund.
They would not want to invest in it.
तो आपका second fund फिर क्या करोगे? 8 to 10 years के बाद what will you do? Your name will be spoilt in the market.
Yes, sir.
So that is why you have to follow the norms. And although I don't personally feel that being an IITian is a guarantee that this person will succeed.
Yes.
But because of the alumni networks and the all those advantages, then that helps a lot.
So one aspect is that they have proven themselves in terms of dedication. As getting into an IIT itself takes extreme amount of dedication. So in one way they have proven that they can be dedicated to one thing. So it kind of
They can compete and crack
Exactly.
competition.
Yes.
Yeah, that is true. And they have this attitude also that we have to move ahead of others. So that sometimes helps. Yes.
So is VC or venture capitalists are interested to invest in fintech companies? If yes, what are the benefits they see in investing in such companies?
Well, if you look at the fintech sector,
Yes.
even in fintech there are 7-8 sectors. So lending tech is one sector.
Lending, paytech,
Yeah.
payment tech.
Payment is another sector.
Yes.
Lending is one sector. So collections is one sector. Right? So there are many types of. So with the advantage in India of lending to a fintech is that the India stack, which the government created, which is Aadhaar, UPI, and so India is the largest country in the world with the maximum number of digital payments.
Yes.
With the UPI, we are ahead of China. And because Aadhaar is a biometric instant enablement KYC system, so creating a fintech here is relatively easy. So you look at PhonePe in 2018, it was zero revenue. It was started by Walmart. Today, from zero, it has in 5-6 years, it is 3,000 crore. So they locked in the customers by offering free services. Once they had crores of customers and they were the leaders in the digital payment space, they started offering their products to these customers. And that's how. So Walmart bought Flipkart for $21 billion. Today, Flipkart's company PhonePe is more than $21 billion. So they are sitting on a huge gain Walmart is sitting on double gain on their investment.
Yes.
So fintech is, there are 28 countries which are adopting the India stack, including the UPI, and India is helping them, including in Africa. And the business is good, and lending tech is a huge business. You can imagine, recently last month, Reliance spun off its homegrown finance company, Geo Financial Services, and gave it 5% treasury shares of Reliance, and they will sell that shares and start lending that money. So lending is huge, and the demand for, and right now, unfortunately, India is sitting on a 30-year low in terms of family savings. Right now, family savings are the lowest in 30 years. So people are borrowing to consume. Even fridges, they are taking loans. Mobiles, they are taking loans. So this consumerist youth, I mean, we are a young country. The average age is 29. So everybody wants to consume. So lending is a huge. So fintech is huge.
So what are the risks that do you associate with investing in fintech startups?
The risk is that if you don't, there is a term in venture capital which has come up in the last 1.5 years. Come up in the sense that it has become very important. That is unit economics. Unit economics means that just to grow fast, you don't start selling your products at a loss. Loss may बेच दो and revenue will become huge, but there will be a loss, like all these Udaan and all these, even Paytm is in a loss, so Zomato is in a loss.
Most of the startups.
They are in loss because they focused on becoming the top 3 in terms of revenue and customers, not in terms of profits. So the downside of fintech is, in India, if you look from the point of view of a venture capitalist, in India, numbers come very fast. We are a huge population. So, in terms of number of customers, number of viewers, number of subscribers, numbers are in crores. But when you start selling them something, then you start realizing that monetizing this customer is very difficult, because the customer is very price sensitive, he's very value sensitive, he's very quality sensitive, he's time sensitive. India's is the most conscious consumer. So you would have heard the term PMF, product market fit. Product market fit means that a product has been developed and you have also sold it to some customers, so you have proven that this has a buyer in the market. So that is a stage of the startup, right? So attaining a PMF in India is very important for companies, because they feel if the PMF has been achieved in India, this product can sell anywhere in the world. मतलब इंडिया को क्रैक कर लिया आपने तो चाइना, यूएस सब क्रैक हो गए, बिकॉज यहाँ का कस्टमर ना, वो रिटर्न्स भी देख लो, आज तक ई कॉमर्स की रिटर्न्स मोर देन 25-30% रिटर्न आ रही है, सारा कैश ऑन डिलीवरी, सारा रिटर्न है. तो कस्टमर यहाँ का इज नॉट अ लॉयल कस्टमर कहीं भी नहीं होता. सो ब्रांड लॉयल्टी डज नॉट एग्जिस्ट दैट वे. इट ओनली एग्जिस्ट फॉर सुपर रिच पीपल who want to buy a Louis Vuitton and they want to buy that.
Yes, sir.
Yeah.
So, what strategies the venture capitalists look while investing in such companies?
The strategies are that you should always, if you are investing early in the startup, like there is not much on the ground, then you are betting on people, on the founders. So the strategy is to be very sure, why is the founder wanting to solve this problem? There's a problem statement and then there is a solution statement. Then a team is formed to solve that. Then you have to study the market size. Right? Then you have to study the competitors. Then you have to study how you can be better than them. What can you offer which is better than them? So you have to study make a business plan.
Yes.
So So the thing is that if you are investing early in the company, then you have to bet on people. So you have to be very sure of the founders. Secondly, if you want to invest early, if there is nothing much on the ground, then it's the riskiest capital. Of course, if the company does well, then you will make the maximum return because you would have invested at the lowest valuation.
Yes.
But you can easily assume that 8 out of 10 companies will close down, which you invested early. So most of the venture capitalists, they are doing 3 strategies.
Okay.
Now this is between you and us. The strategy is save your backside. And how you save? Never invest alone. Invest only when 3-4 other funds are investing. So that you can always tell your limited partner, boss, these 4 were investing, Sequoia was also investing, so I also came in. It also helps you because some lead investor in the round would have done the due diligence. So you have the due diligence in front of you. So due diligence does not depend on you. Now this is a controversial strategy because if you tell it to a lot of people, they will say that you are a coward. I mean, you don't have the conviction to take an independent decision. But this is the strategy which 95% of funds are following. They don't invest alone. The second strategy is always invest after the PMF has been achieved. So the product is there. They have sold it to some customers. Customers paid for it. So there is market research, primary research, secondary research. So your money will come in. It will go in marketing because the brand just needs marketing now. Immediately the revenue will go from 5 lakhs to 50 crores. The valuation of the company will become 100 times. You sell your equity and be happy. Lowest risk, no risk. So most of the people, 95% venture capital, they are investing at post PMF. Now students like you who say, sir, hame to mila nahi fund. So for you, the options in India are limited. You can go to IIT, IIM, you will get 20 to 50 lakhs. Or you can go to Startup India scheme in any other campus. The incubation cell will offer you 20-25 lakhs. Or you can go to angel investors. There are many types of angels nowadays. The exposure is so good that everybody feels confident investing their money. So if the angel is from India, he will give you small money. Small means if you go to an angel network, they will tell their angel investors minimum they have to put is 2 to 5 lakhs. So if suppose 10 people are investing, you might get 70-80 lakhs. 2 crores, 1 crore. But if your angel investor is outside India, because their currency is strong, so you will get in crores. He can give you 2 crore, 3 crore, 4 crore. It really depends, on investor to investor, and so that is the thing.
So what is your due diligence process?
Due diligence happens in 4 areas. One is founder background. So integrity is the biggest thing. If you are investing early, then you are betting on the founder. Now you have to be sure that whatever founder represented to you, it was true.
Yes.
So what you do is you make some calls to the city in which the founder belongs. Talk to his friends, talk to the school people, college people. You do a background check. And you check the degrees and all. So that is one founder background. The second is compliance, which means that the company has been set up properly. The shareholding pattern is what the founder said. All the government guidelines, the Company Act, everything is complied with. And third thing is accounting. That whatever accounts has been created, the agency did a good job. There are no lacunas. So, and the fourth thing is contracts. Whatever agreements have been signed with vendors, employees, management, marketing guys, agencies, digital marketing, those are proper and they cover the risk of the company. So mostly these are there. In case it's a technology company, the biggest and the most important thing is technology due diligence. which means that, see, today you talk to any founder, he'll say, I have artificial intelligence. Now, if you don't understand what is artificial intelligence, how will you check whether what he's saying is true or not?
Yes.
So you have to do the technology due diligence. You have to keep some people on your panel who are mostly professors from IIT or some students from IIT. You tell them, you do our due diligence, we will pay you.
Okay.
So they check the entire stack. They will check the entire algorithm. They'll check how much of AI has been used, whether it is proprietary in the sense that in the future it can convert into intellectual property. So these 5 areas are what we do due diligence.
Okay.
Sir, what is the one thing that sets you apart from other venture capitalists that helps you stand out among other people? Or it could be one of your strategies or a certain skills that help you invest better and do a better due diligence and figure out which companies or which founder is worth investing in.
Well, every venture capitalist you talk to will say that we are special. So I also say we are special. Now, how we are special, I can tell you many things, but don't do a due diligence on that. Okay, what I mean to say is we are special in the sense that it has been more than 8 years, and many 90% venture capitalists, once they put in money, they do contribute to the company, but in a negative way. Because what they will say is, give us a cash flow sheet of every week, and every week they will put an analyst who will talk to the board of directors, and he will say, okay, your money is running out, and why are you spending so much on this? And they will do those checks. So sometimes it becomes negative because the decision making of the founder becomes diluted. But in a way it is critical also, because if you look at the companies which closed down recently, Trell and BharatPay is in a bad situation, Byju's is in a bad situation, Go Mechanic closed down. They all closed down because of mismanagement of cash flow. So it is a double-edged sword. If you are after the founders too much, then it is intrusion. If you are not after the founders in the right way, then it might close down. So it is a double-edged sword. But most of the founders, the problem is with the VCs. They keep in the team people from Ivy League colleges, MBA. Now, if a guy has done BCom or BTech, then he has done MBA from an Ivy League college, and you keep him in venture capital. This guy has never run his own company, and he's sitting on top of you asking you questions. So it becomes irritable because this guy will ask you very theoretical questions, and many times he will not understand the practical side of how to run a company. So we are very mindful of all these things. We do try to contribute, like there are 3 things which any startup needs. One is network. You need to know a good digital marketing agency and the price. At what price we should sign up. You need to have good lawyers and at the good price. Not a crazy price like 25,000 per hour, and you need good CS. You need office space, and you need to know the price of all these things because you are a startup. You have limited money, so we help in that. And many times there are structures available which are not only cash flow based. For example, you can keep a mentor by giving 1.5 to 2% equity. And this mentor can be on your board of director and be from the same sector and help you like anything. He'll tell you, where to open a retail outlet, what price. He'll tell you the mobile numbers. He'll really set you up. And he'll just charge 1.5 to 2% equity. Many people, many startups, they don't understand that they can have equity also as a structure. So,
Yes.
and then you should have ESOPs, like to if you are paying less salary, then you give some ESOP. So all those things. So one is network, one is capital, money, and the third one is management know-how, which is like if you are implementing a particular HR thing, then why don't you take the solution of this startup? It will cost you very less, and it will be better than keeping 10 people in the HR. So that also know-how. So these three things we try and provide. We are a small team, but we try to help as much as possible. And follow-on rounds, main thing is that, I mean, if the next round does not happen, so most of the VCs try to help with follow-on rounds. And the best VCs, what they do is they lead the next round. So they say that the first round was $1 million, next round is $3 million. We will put 1 out of 3 million, and we will lead the round. You can tell it in the market that one is already arranged. So once that goes out in the market, it becomes very easy to close the round, because there is somebody putting his neck out.
More people are willing to invest.
Yeah.
So, sir, would you please like to tell us about your past investments that have done very well?
We have invested in 6 companies. So one of them is a hair extensions company. It's a consumer company, consumer B2B company. So you know that Tirupati and all these where the hair are donated. Now, not many people know that hair exports from India is more than 5,000 crore. And in fact, it is not only Tirupati, but most of the temples in Tamil Nadu, people donate hair. And the government has created a company called MSTC, and they collect the hair and they auction it on the internet, the hair. And so we this company has created a brand for exporting the hair, and so that is one. And then there is Animoi Technologies. It is a company which has created a robo. Actually, they have created 4 robos, but one of them is this cleaning of municipal sewer lines. So you go people going in there, and many times they die also because there is a gas and lot of methane and other gases. So the Supreme Court has banned manual scavenging. So they have created a robo for this scavenging. So just like that, we have invested in a legal tech company. Now the government has passed the mediation law. So mediation has become legal. So any lawyer can practice mediation also. He can represent both the parties and try to find a solution.
So that happens out of the court, or
it happens out of the court, but the final mediation can be signed like an affidavit in the court, so that it is legal. So no party can back out. So there's a legal tech company we have invested into mediation. So like that, there are some other companies also we have invested.
So how do you act when things aren't going according to the plan?
I shut off my mobile, I go to Himalayas, and the best thing is to go in nature. So it's nature, we are products of nature, we are not products of a digital world. But being in so many screens, iPad, TV, laptop, mobile, our mind gets used to the digital information. And because we are getting information in click of a button, the mind also starts, we are a monkey, underneath us we are all monkeys, we copy everything, mind copies everything. So that saying which says that we are a sum of the 5 people who we interact with mostly.
Yes, sir.
So what happens with these screens, the mind also tries to run fast. Because I can also throw out information fast. So it becomes tired very easily. So by the afternoon you will feel so tired. So then your decision making, and you'll feel negative about life also. So the only solution is either be with your kids, spend some time with your kids, because they are innocent and they won't judge you, and or you can be in the nature. So I do that.
Sir, I think I have heard one thing about Bill Gates, that he spends around 1 or 2 weeks per year he goes into a forest where he spends time to relax
Read
from all
books.
the
Read books. He just closes off his mobile for a week, takes books. I tell you, the most successful founders, venture capitalists, they will always tell you they read books, and they just gorge on books. Like, they will read 10 a week, 5 a week, and they don't touch fiction. They read only non-fiction. So yes, I have a whole library at home. But instead of physical books, I read from the mobile. So the only irritation with the mobile is that it has everything. So sometimes a call will come, sometimes a WhatsApp will come. It's a lot of distraction. Morning alarm, I don't want to put on my mobile. I want to put on a normal alarm because I want it to be shut off. I open it at 10 o'clock, not before that. So these things are very important nowadays.
That's one.
In fact, we are wanting to put in money in a digital detox company, which will train people how to be away from screens.
We should also practice that.
Yeah, it is very important.
Technology addiction nowadays.
It is very bad because there is artificial intelligence. It will show you a YouTube video which you were seeing 5 months back, and suddenly it will show you that video, and you will say, "Oh yeah, I was seeing this video. I didn't see it fully," and then you will start seeing 10 of them.
Complete कर लेते हैं इसको भी.
Yeah, it is very irritating. Very irritating.
काफी.
Okay.
So, sir, as you know, in today's world, women empowerment is a very big avenue. A lot of there are certain venture capitalist funds who are investing majority of their money in female-led startups, and it has now become a lot of kind of a trend in several countries. So how do you in a way invest in women-led startups, or what percentage of your overall investments go into women-led startups?
See, I don't know. I mean, somehow I feel that as a Hindu, like, we don't differentiate between men and women. Right? I mean, we always feel that the inherent spiritual side of both are the same.
Indeed.
Even it is same with all living beings. Right? So this is what our teachings tell us. But we are living in times where wokeism, liberalism, feminism, we're living in those times where we are constantly judged basis foreign theories. So if you look at the status of female workforce in India, we are better than the US in some senses. For example, in the US, 7.5% of women are pilots are women. India, it is 12.5%. Right? The US has not seen a single female prime minister since 250 years of democracy. India had Indira Gandhi. Of course, it was a family thing. So I mean, the Gandhi brand name was there.
But regardless, we had.
But still we had. Like, Sri Lanka had Bandara Naike, and Philippines had the wife of that Hitler was there. Some dictator was there. So female in Asian countries, women empowerment is a complicated thing, because if you look at it from the lenses of the Western worldview, you will start getting a lot of meanings which are not true here.
Which are not applicable.
Which are not applicable here. You look at, I mean, both of you are, and you are in the same batch, in the same college, and getting the same education. It's not like they are not allowed to drive, or they have to wear a burqa, or like nothing like that, right? I mean, so we are not very conscious that we have to choose women-led companies. But if a women-led company is coming to us, we don't discount it by saying that it is a women-led company.
Yeah, so there is fairness.
Yeah, look at, I mean, Shiro's. Shiro's was set up by this lady who had a bad personal family life with her husband. So she approached VC funds, and one of the VC fund whose investment thesis was not actually of that particular sector. Still, they put money in that company, and today Shiro's is, I think it has more than 100 employees in Noida, and it is a woman-led, and all the employees are women. You look at Nika. I mean, she was a hit banker, and she understood the whole financial markets very well, and she opened a consumerist company. And the biggest difference between Nika and other startups who listed on the stock markets, that she still holds more than 40% of the company. So she was a banker, so she understood कि उसको बहुत equity नहीं देना दूसरों को. Still she became a unicorn, right? So if she can do it, then I mean anybody else can do it, right? I mean, so we are not very mindful of that. But having said that, in Loyal VC, the Canadian venture capital fund, we have consciously invested in more than 33% of our investments are in women-led companies across 60 countries. So because that money was also coming with a lot of conditions that you have to invest 1/3 in women-led companies. So we did it consciously. But if you look at from my point of view, I mean, I will not differentiate between a woman-led company and a male-led company. No.
So, sir, as we would like to ask one of our last questions. So, what would you advise future upcoming entrepreneurs who are looking to raise money, and how should they go for it? What precautions they should take, or how should they approach venture capitalists? How do they convince them, and what should be their overall strategy?
See, I mean, raising your own fund, it requires that the market has a lot of trust in you. They know this guy has a lot of integrity. He will not run away with our money. He will not do shady things like take out the money in some other ways
And use for his personal.
And what happens is alumni, you were asking, right? I mean, that why should Ivy League colleges, why should they give preference to alumni? It's not fair because of this integrity factor. They say this guy knows 800 other Harvard alumni. He will never spoil his name amongst the 800. So that is why. And the second practical side of thing is, if you want to raise small money, you can raise it from angels, right? 25 crore, 10 crore, right? But if you want to raise $100 million fund, you will have to go to big institutions. Now these are endowment funds, university funds, pension funds, like big ones, $800 billion, 100 billion. Now how to raise money from them? They don't know you. So you will have to set up a meeting in the US. In one meeting, they will not give you the money. And how many times the meeting can you have with them? 2 times a year maximum. They will not give you the meeting. So naturally, if you are from an Ivy League college, you will find some IITian sitting in that Blackstone or Bravia or Bridgestone. You will find some IITian sitting there. So your access becomes easy. And you are able to raise those hundreds of millions dollars. That is the whole story. And the story is not that you are from Ivy League, so there's a badge, and it is the reality of the market. That these guys are already sitting in these companies, so you have no choice. So like one of my MBA seniors, Sonal Kohli, he opened a hedge fund. So he was in Aditya Birla Private Equity, and Aditya Birla got a very good exit from one of the companies. So that money, with the profits which were made, capital gains, that money was distributed in the team. So he got a huge amount of money. So he had the money for the sponsor. The sponsor has to put 3% of the fund size. He became a GP. Now he had to raise funding. He tells me like it took him 2.5 years to raise $50 million. वो मीटिंग सेट करो, यूएस जाओ, फिर वहाँ पे प्रेजेंट करो, फिर देन you have to tell them that our auditor is Big Four, it is Deloitte, PwC, our lawyer is Big Four, like so you have to keep all the agencies, costly agencies, then you have to beautiful office in the prime location. So all these are hygiene factors for. So I would suggest anybody who wants to open a VC fund, if you have proven yourself in a company, then it will be easier for others to bet money on you. So they will give you the money for that sector. Otherwise, you'll have to do the whole hog. You'll have to do the whole effort, and do a CFA with the US. It helps a lot. And secondly, write a lot. Thirdly, like it has taken me 8 years. Today, somebody searches my name on Google or YouTube, there are around 2 lakh results. So that has taken me 8 years, 300 talks, and so be visible. Talk about what are you passionate about. किस चीज़ के लिए VC fund raise करना है? To invest in supply chain, will spend in retail, technology, deep tech, and why are you suitable to invest in such a company? So, and you also have to do your networking with other VC funds, these guys, because we'll invest together. So all these things are important.
Thank you so much.
Thank you so much. Thank you so much. And last time also I enjoyed talking to you when your batches came last year.
Yes.
So I hope this time also I was good enough. But in case you have any other requirements, let me know. I always have happy to advise students like you. Right?
Thank you so
Thank you.
much.
Thank you very much.
ठीक ना?
हाँ जी, हाँ जी,
बहुत बढ़िया. चाय.
हाँ जी.